In fact, the country's largest developer is exiting its luxury hospitality business. That's, of course, Aman Resorts. We have Shibani Bhatia and Mohit Bala joining us with those exclusive details from New Delhi. Mohit, to you first, of course, run us through who is buying the business from DLF, when is the deal likely to be concluded, the deal valuation, all that that the investors are really watching out for.
Shivani would be picking up from people very close to the development is that Malaysian sovereign wealth fund Khazanah, which is of course a $20 billion fund. They manage assets across the portfolio of companies across Asia. Some of the key investments are Malaysian Airlines, Axiata Group, CIMB Bank, and they of course also have a controlling stake or a significant stake in Parkway Holdings. They're obviously locked in a battle with Fortis for control of that asset. And Khazanah is buying DLF's Aman Resorts. We understand that the deal is likely to be signed as early as July, and Khazanah is valuing that business at somewhere between $300 to $350 million. Goldman Sachs and JP Morgan are the advisors to DLF on this particular transaction. We understand that DLF has been in negotiations with Khazanah for about a month and a half now, and the sovereign wealth fund, of course, making its foray into luxury hotels business through this acquisition. So clearly this is pretty much a deal that's done. It's just the documentation process that's going on. We understand the deal is being structured at this point in time and likely to be signed in July, as early as July, as I said.
All right, Mohit, so as soon as July is when we could see that deal concluding. Shibani, $300 to $350 million is what the deal is likely to be valued at. What are you picking up in terms of how DLF will use the proceeds of this sale?
Well, Shivani, that's very interesting because in 2007, when DLF invested into Aman, they had an enterprise value of $400 million, out of which $250 million was the equity part of it. Now it's going to be a complete buyout that Khazanah is looking into. So we're talking about $250 million to be up. So we're talking about a premium of nearly $50 to $100 million. And sources tell us that the deal could be valued at about $300 to $350 million. More important, how will the proceeds be utilized is clearly the debt, which will come down significantly. The mandatory debt repayment right now is pegged at about 2,600 crores for FY11, and DLF as usual is very comfortable on those grounds because they've already paid up 1,000 odd crores. For the remaining 1,600 crores, that will be utilized by the Aman stake sale. Plus, they're also expecting 2,500 crores coming in from different land banks that they hold across the country. So they're very comfortable when you're talking about the debt payment, and as pretty much on track, they're selling off their non-core assets along reducing the debt. So that's going to be a big potential upside. We are hoping that the deal really gets signed by next month, and the due diligence is right now underway for the final deal to be done.